Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Geopolitical calm is currently the dominant driver across global commodities, creating a sharp divergence between energy markets and digital assets. Oil prices have collapsed, shedding over 5% of their value in a single session. This freefall follows President Trump's decision to pause airstrikes on Iran, effectively removing the immediate threat to Middle Eastern supply chains. Brent crude futures have plunged 6.53% to settle at $86.54. The market is now pricing in a significant surplus as OPEC Plus accelerates the unwinding of production cuts. Technical indicators suggest neutral momentum, but the underlying fear of oversupply is weighing heavily on traders. Simultaneously, the gold market is reacting to shifting inflation dynamics, with the precious metals sinking below the $4,100 mark. Investors are reassessing the correlation between geopolitical risk premiums and real yields. Meanwhile, the silver spot price is climbing, driven by uncertainty surrounding Federal Reserve rate policy. Analysts are closely monitoring upcoming CPI and GDP data to determine if precious metals portfolios will see further inflows or outflows. In the digital asset space, security remains the primary concern. WEMIX has suffered a $724,000 USDC loss after a contract breach. The attacker successfully bridged the stolen funds to Ethereum and BNB chain before depositing them into exchanges. This incident highlights the persistent vulnerabilities in cross-chain infrastructure. On the macroeconomic front, physical disasters are reshaping regional economies. Historic wildfires in France and Spain are triggering a shockwave through the insurance and tourism sectors. Lloyd's of London and major EU reinsurers are bracing for substantial claims as tourism revenue evaporates in key Mediterranean regions. The financial impact extends beyond immediate payouts, affecting long-term investment in affected infrastructure. Looking ahead, the market is waiting for economic data to clarify the direction of monetary policy. While no major high-impact releases are scheduled in the next 36 hours, the absence of new catalysts allows current trends to play out. Traders are watching the $86.54 support level for Brent crude and the $4,100 threshold for gold as critical technical boundaries. The interplay between geopolitical de-escalation and structural supply shifts will define the next trading session. Investors should remain cautious of volatility spikes as OPEC Plus decisions continue to influence global energy markets. The divergence between falling oil prices and rising silver values suggests a complex macro environment where traditional safe haven assets are being re-evaluated. As the week progresses, attention will shift to corporate earnings and any unexpected geopolitical developments that could disrupt the current calm. The market is currently in a holding pattern, waiting for clearer signals on inflation and central bank policy. Until then, the focus remains on managing risk in both traditional and digital asset classes. That's your market briefing. Follow Rumour with AI for daily market intelligence.